Hi traders, in this particular video we are just going to be diving into the ICT scalping strategy. All right, so it's a short-term trading method built on institutional concepts. Okay, scalping is often seen as fast and chaotic, but when combined with ICT principles, it becomes a disciplined way to trade the lower time frames. Okay, let us start with the basics, which is liquidity. Liquidity drives every move in the market, and even on the 1 minute chart, price seeks out areas where traders place their stops. Okay, so for scalping, these areas are often equal highs, equal lows, or obvious swing points. All right, institutions target these levels to trigger orders, and that is where we look for setups. The next piece of the strategy is the stop hunt. All right, stop hunt. On lower time frames, institutions push price beyond the short-term high or low to capture liquidity. So once that liquidity is taken, price often snaps back in the opposite direction. So this is the entry point we are watching for in the ICT scalping strategy. Now let us bring in order blocks. Okay, these are the last bullish or bearish candles before a strong move, and they serve as footprints of institutional activity. All right, when price sweeps liquidity and then returns to an order block, that is where we look for scalping opportunities. All right, another critical element is the fair value gap or the imbalance. Okay, because these gaps form when price moves too quickly in one direction, leaving untested areas behind. On the 1 minute or the 5 minute chart, fair value gaps often align perfectly with liquidity grabs. Okay, so when price retraces into these gaps after a stop hunt, that is a strong confirmation for scalpers. So how do we put this into a step-by-step framework? First of all, you should mark liquidity zones on your chart. All right, equal highs, you can see like what I did here, right? You mark equal highs, equal lows, you know, those areas where traders will likely want to set their stop loss if they should enter a trade. If you enter a sell trade around here, you likely want to set your stop loss just above this, right? If you had entered a buy trade around here, you likely want to set your stop loss just below this. So those levels are areas of liquidity. Those are areas where you want to mark out. Okay, you can see what happened here now, right? So you wait for price to sweep that liquidity. Okay, this could be a quick spike above or below a level. Then you look for confirmation at an order block or fair value gap. All right, you want to look for confirmation at an order block or fair value gap. Now I'm trying to see if we had an unmitigated order block around here. This particular level where we had this false breakout, this liquidity sweep. Right, so okay, so this was gonna be a change of character, right? And this was going to give us an order block zone, right? Quite a tight one here. So if we are going to work with this, it means that we had the level cleared, right? but if we are going to work with this, let's catch that last bearish candle there. All right, so we're just trying to find if there was a particular order block. That's what I'm trying to do. If there was a particular order block where this spike got into. So this is not a perfect example per se. All right, this is not exactly a perfect example, okay? But basically what I want to show you is that whenever you have price sweep through an equal low or equal high, or basically a liquidity area, what you should do next is to check out for any other block that is nearby. You check out for a nearby order block that is beyond that liquidity zone. So when you check out for that order block, there is a possibility that price would likely go and tap into that order block, or a fair value gap. A fair value gap. If price taps these zones after sweeping liquidity, that is your signal. All right, you have to use a market structure, shift to confirm. If price changes direction and breaks a short-term high or low, it strengthens the setup. All right, so imagine you catch such a move on time and you enter, you would be able to get a good risk to reward ratio as price moves in your direction. All right, so the ICT scalping strategy is all about discipline. Instead of entering on every move, you are waiting for liquidity to be taken, watching for institutional footprints, and confirming with structure. So this makes scalping less about guessing and more about following a repeatable process. All right. Now, by mastering this approach, you will start to see how institutions control price even on the smallest time frames. All right. What looks like random noise on the 1 minute chart or the 5 minute chart may actually follow a clear structure once you know what to look for. All right. Now, before we wrap up, make sure to hit the like button and click subscribe if you found this breakdown helpful. It is the best way to stay updated with new strategies and trading insights. And don't forget to leave a comment. Have you tried scalping with ICT concepts before? I would love to hear your experiences. That is it for this lesson on the ICT scalping strategy. Keep practicing, stay patient, and always trade with structure in mind. Thank you for watching, and I'll see you in the next video.